Alrighty, folks, it is a pleasure to bring back Steadily to the show. We actually got CJ with us today. This is just kind of perfect timing. We obviously have had a horrific event down in Southern California. Lots of people, unfortunately, are going to go through their first ever insurance claim. So I thought we should step back. We should highlight what the normal process looks like. We will also break that into what happens if you find yourself, unfortunately, being underinsured. And then we'll talk about what are some things you could do today, no matter where you are in the country, to make sure you are set up to go in the right direction should the unfortunate ever happen. CJ, first time on the channel. Please introduce yourself. What do you do? What's your story with real estate? Let's go.
Yeah, well, first off, thanks for having me. Excited to join the program. Like you said, my name's CJ. I'm the director of claims at Steadily. I joined the team after 9.5 years on the auto side of the industry, all in claims, ranging from your simple liability auto accidents to the complex severe injury, disputed liability coverage. And so I joined the Steadily team to help launch our claims team internally. So been here just over a year.
Nice.
We launched our claims department back in May of 2024. So coming up on a year, it's hard to believe. But now over 10 years on the claims side of the insurance industry.
Well, that is wonderful. This is wonderful timing to have you on this the channel. I could not imagine a better time. Lots of people in Southern California, unfortunately, have woken up to the reality that they are likely going to have to file their first insurance claim ever. I have known people across the country that have been paying into insurance companies for years, never had a claim. In fact, that's what you hope for, right? That's what you're hoping for. So let's just assume, and again, I'm a real estate investor. I've now had 5 claims, 4 fire, 1 flood, so I'm familiar with it. But help me out. You've had the unfortunate, right? And it doesn't necessarily have to be in Southern California. It could happen anywhere. A kitchen fire, laundry fire. I mean, there's lots of ways this could go. But you wake up one day and you realize that your house is gone and you have insurance. Walk a first timer through what they should be doing, how they should do it calmly, kind of guide somebody through this the first time.
Yeah, so I think there's 2 separate paths to this conversation. So the first path is your relationship with your insurance company, which is guided by a contract. And in that contract, there's certain requirements about reporting. And there's also certain requirements around emergency measures that you have to take with your property. So down that path, requirement number 1 or item number 1 that should be on your mind is reporting the claim timely to your insurance company. In some rare circumstances, if there's a delay in reporting that then causes the insurance company to not be able to properly adjust or investigate the claim, that can create potential concerns with coverage in that scenario. So number 1, promptly report the claim to your insurance carrier. And then when it comes to reasonable emergency measures.
Yeah, let's break that down, because I just want to give some real life examples. So again, absolutely right. As soon as you hear about it, you should be making every attempt to file a claim. So every insurance company that I've worked with, there's an 800 number. It's really simple, folks. You call that number, you give them your policy number, you tell them what data you know about it. And again, I'm somebody who owns property out of the area. It might as well be out of state, might as well be in another country, but let's just say out of state. So for example, I just had a fire about 8 weeks ago. I was alerted to that at 2 a.m. Right. My phone went off. My property manager's like, I'm standing in front of it. It's, 2 units of the 10 are gone. Don't worry. It's out. No loss of life, no loss of pets, blah, 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 calling it a claim. So I could have waited until the morning to make that call. But again, under the guise of as soon as possible, I woke up, washed my face, found the insurance for that property. There's a 1-800 number. I called it up. It's serviced 24 hours a day. I told them what happened. I told them what little I knew. I gave them the contact for somebody on the ground because, again, this is out of area. And in about 10 minutes, maybe 8 minutes, they've taken my information. They've given me a claim number. Write that down. And they basically said, thank you very much. An adjuster will be contacting you within 24 to 48 hours. and then I went back to bed. That's the process.
Yeah, I mean, nowadays there's all sorts of different options to report claims with most companies. You've got the 1-800 number. Most companies have an online submission form of some sorts or a portal in which you could report your claim. And if you're unfamiliar, check their website, or even most basically, generally it's on the declarations page that you have where to report the claim. So yeah, all sorts of different options to get it done. It's important that you obviously do get it done.
Yeah, do it. And it's done when you have a claims number, right? That's kind of the end result of that first call. Is like, it's in their system. There's a number, there's a date, there's even a time, I'm sure, identified.
Yes.
And that's very quick, but very, very important. And I want somebody going through this first time, because again, I remember the first time I lost a duplex a decade ago. Dude, I feel so bad for people the first time. You're like on an 11. You're like on alert.
Oh, yeah.
You're like, you don't know what's going on. You think everything is going to be horrific, and you think this is going to be a 3-hour, rectal exam, and all of this. It's so easy. I mean, it's like they're there for a reason. You've been paying insurance likely for years, if not decades. This is what you're paying for. They're professionals at it. The first step of the process: quick, clean, important. Don't stress.
Correct. Yeah, exactly. Okay. I mean, it's easy to go to worst case scenario. It's happened to me myself at my own house. I saw water coming out of the basement and I said, oh, this is going to be a terrible summer. But about a couple weeks later, I had money deposited in my bank account and repairs were started. It all was okay. But
yeah, so this is such a great conversation. I want to give people hope. So like the fire that I just had, it was 2 units of an apartment building. So again, right, 2 a.m., by 2:30, I'm asleep, right? I'm back sleeping. I think it was later so about 2 or 3 o'clock in the afternoon, they identified the adjuster. The adjuster called me. And of course, I told him the same thing. Yes, I'm the right guy, blah, blah, blah. He started asking me questions. I said, as you'll see in the notes, if you want anything on the ground, call this person. I give him, right, you want pictures? Call that guy. I might as well be 10,000 miles away. I'm not there. And he's like, okay, great. Do I have authorization to speak with this guy? Yes, you do, blah, blah, blah. And that adjuster worked with my anointed person to go out to the facility. And they, I guess they did their inspections, their walkthrough, all of those things. It took about 3 weeks-ish for them to complete the report, complete the cost, the bill of material. They reviewed that with me ahead of time. And then probably a week after that, all the money was, I was sent a check for $244,000 again to pay that. So again, the first time you go through this, you're probably going to be shocked how fast the money shows up. At least I was.
Yes. And, there's all sorts of different ways in which companies do it nowadays. You mentioned one that's obviously very common, which is that an adjuster comes out to the property itself. They can either adjust or inspect the damages alongside you, alongside a property manager, alongside a contractor that you may have. All of those things happen. And then what they do is they take all of those photographs that they've taken at the scene, and then they go back and create an estimate. What are they going to have to remove? What are they going to have to replace? How much is each of those going to cost? They take the measurements of every affected room. And so there's a lot that goes into it. And then generally that information goes back to either a desk adjuster, who maybe that adjuster's, the phone number you were given when they set up the claim. That's evaluated. Obviously, they have to verify that the loss is in fact covered. A fire loss in your example, of course, is. And then the check comes. In some cases, an EFT payment comes. So it's very complicated and can certainly be scary when you're going through it for the first time. But generally, there's just a few basic steps of the process.
Yeah. Yeah. Again, as somebody who's been through it 5 times, the first time, again, I was on 11, right? 12. And I remember being shocked. I think in that case, the money showed up in less than 30 days. But let's also break down some other stuff that I've had experience with for folks. So again, the first thing is whatever number you get the first time, is their best guess, right? If you are going through the repair process or inspections or the city or other things come to bear, you can go back, and I don't know what it's called. I don't know if it's readjustment or it's probably got some lingo in insurance. I don't know what it is, but you can go back and get a second check. I remember that happening at the second fire when something was legitimately found out after the fact, after they removed stuff, and the guy came back and said, "Yep, wasn't in the first one, still part of this," and a second check was coming.
That's actually extremely common when you're talking about fire losses. The insurance lingo or jargon, it's called a supplement.
There you go. That's the word. Supplement.
Yeah. So that of course is something that everybody's entitled to do if the damages end up exceeding the scope of the initial estimate. But the reason it's common on fire losses is because of the smoke and the ash that can get up into the wall cavities. And so
correct.
The estimate is generally written off of what is visible damage that is confirmed. And so as you're, let's say you're working with a mitigation contractor that's in there helping rip out some of your drywall or your sheetrock, and they discover soot in the wall cavities, this is now new visible damage. And generally speaking, companies will either send out the inspector again or the adjuster again to take secondary photographs. Other times, companies will accept photographs from the mitigation company or the contractor along with documentation to support the additional damage and just update the estimate remotely. So discuss that directly with your adjuster should that arise. But supplements, especially in fire losses, are pretty common and they're not anything to be afraid of.
Yeah, again, this is a process that, let it be clear, they're not on your side. I'm not saying they are, but it's a pretty routine process that they know that they're going to be paying claims, right? That's part of the insurance business. So it is pretty smooth. It shouldn't be frightening. It's a lot more structured, having been through it for five times now. So I want to give that first time fire claim victim hope is what I'm trying to do here. So let's step through something that I think is going to prove to be all too common. And especially in a world where inflation has been ripping, right? We've seen property values go up. We've seen materials and labor go up. Material and labor is up like 100% in the last, decade or so. There's this unfortunate thing that you sometimes find out too late. I think the industry calls it, I've called it underinsurance. So let's define what underinsurance is and why it can be so problematic.
Yeah. So in the most commonly discussed terms, that I'm familiar with when it comes to underinsurance, it's somebody insuring a property for an amount that is less than what it would actually cost to rebuild or replace that property should it experience a total loss. A common misconception I hear when somebody talks about underinsurance is that the insurance amount should equal what the value of the home is on a Zestimate on Zillow or, and that's different. That's not the same thing. So your insurance doesn't insure the land or the land value, generally speaking. It's the cost to replace the dwelling itself. And so underinsurance would be insuring the property for a replacement cost amount that is less than what it would actually cost to rebuild that property.
And the reason you see this a lot in my experience with mom and pop, the only thing they ever own is that house, is they probably have had insurance for years. They've probably had a local insurance broker for years. And they've probably increased the coverage amount, some kind of, 3% a year, right? And that does a couple things. One is it keeps the insurance payment, close to what it was. But ultimately, when you compound that year after year after year, you could be significantly uninsured. And you're absolutely right. I'm talking about the replacement cost of the building, not the land value. But you could still be underinsured. So let's do a for example. Let's assume the house is owned free and clear, so we remove the mortgage problem from this equation. And let's assume it cost and a total loss occurred. So we're just going to try to make this as simple as possible. and you're capped. You bought the house 30 years ago. You're now capped at a total, $250,000, but you get, the rebuild cost is $500,000, so it's double.
Yep.
Tell people what unfortunately happens in that situation.
Well, from our perspective on the claims end, we're interacting with a customer that's devastated.
Correct.
We're
Yes.
interacting with somebody that has, oftentimes spent their hard and earned money to invest into rental properties, and now they're staring essentially a 50% reduction in their investment.
Yeah.
Like this, because the most that would be paid out under that policy is $250,000, regardless of if the cost to rebuild is $500,000, $400,000, $600,000. The maximum amount under their policy that's payable is $250,000.
Yeah. And that, just so people know where that's found, that is right on what you would call the deck page. We
Correct.
would probably call the declaration page. But folks, that number is front and center. And the reason I want to bring this up is I had to go through all my deck pages. I don't know if it must have been 23. It wasn't last year. It was 23. And I got to be honest, I was underinsured in like 70% of my portfolio, most of those by like 10%, maybe 15. But there was a couple of properties that I had bought early that were probably 50% underinsured. So again, I want everybody out there, right? My channel, very much investors, Steadily, very much investors. You don't even do ORaaT stuff, very much. But please do me a favor. Go get your deck pages and figure out if you're close, because there's nothing worse than having the tragedy you paid for happen, and then you get half of what you need. Because at that point, what happens? You take the $250K, you scrape the lot, and you sell the lot. That's what happens.
Well, and that's correct. And in essence, what somebody is doing when they're not checking that stuff, they're self-insuring for the remaining risk.
The delta, exactly.
They're self-insuring, but generally speaking, they're not putting aside the money for like they're not paying their own premiums to themselves for the remaining self-insurance. And so then when the loss happens, they don't have the reserves, in using another insurance term, available for themselves for the self-insurance. I saw this come up on a property up in the Poconos in Pennsylvania. It was about a $900,000 Airbnb, massive water loss. And they had insured the property for like $200,000. They did it intentionally. Because they thought, well, what are the chances of a total loss happening, right? But we've discussed on this call a lot about fires, and they do happen. The other thing to point out that a lot of people aren't familiar with when it comes to underinsuring a property is it can also end up impacting a claim that's not a total loss. So another thing to look at in your policies for everybody listening is something called a coinsurance requirement. Okay. And just to simplify this a little bit more, a lot of policies, let's use 80% as the number. Okay. Companies will require that you insure your property at a value that is at least 80% of the true replacement cost of your property. So in a $500,000 situation, you need to have insurance on it for at least $400,000.
Okay.
If you've insured it for $300,000, that is 25% below the minimum required value of $400,000. Mm-hmm. And as such, if there was a $20,000 water claim, your payout would then be reduced by that.
So you're going to get 75% of what the claim would be, because
Correct.
you were. Folks, you got to look at this stuff. The thing that I love about Steadily being on my channel, again, is you focus on investors. And folks, there's a link on the screen. It's actually been there the whole time. I recommend going there and seeing what your properties are, just to get a quote, right? It's very quick. It's online. Takes you, minutes to do it. What I've seen with my my customer, my, followers, is about half of folks are getting either getting better coverage or better coverage and lower rates. Clearly it's not for everyone. Lots of you have told me it didn't work for them. Great. Good news. You have good coverage already. But please understand, don't be under it. If you're going to be underinsured, do it on purpose. Make it your call. If you want to be in the Poconos and only do 200K because that's your call, at least make that an informed decision. Don't get caught surprised. I was surprised in 2023 about what percent of my properties were underinsured. And that's a problem. I've had fires. I've had a flood. So, and oh, by the way, insurance is going up. I don't think there's any question that insurance is going up, certainly in California, given what's going on. So get the best price, the best rates. Do yourself, go get some quotes. And you don't have to wait until, renewal. You can get the price now, and if you like it, cancel one, get the other. That's all fair and game, right?
Yeah, I mean, there's no harm at all to shop around and see what the best opportunity out there is for you. And for me, what's important is educating people. You talked about how you had your first claim experience and you were at an 11 or a 12, and you're not the only one. Everybody out there is that, right? When they have their first claim.
Thank God I'm not alone. Woo.
And so, what I tell the folks on my claims team every day is that our job when we get a claim is to make the experience fast, easy, and effortless for a landlord.
Yes.
And in those conversations, we also learn about potential education gaps, that if this individual knew this 3 years ago when they first got into rental investing, they may have acted differently. And so that's why it's important to be able to come onto platforms like this and talk about the claims process or talk about potential coverage things that people should look out for, and make sure that people are educated.
That's awesome. Well, let's give them one more piece of education. The other thing, again, because you focus on landlords, my channel very much is landlords. In my example of the fire that I just got where we talked about a $244K check showed up, there's actually a second check that shows up. Yes. And that is going to be for lost rents, right? Because again, 2 units are out of pocket. I think in my case, what they've done is they gave me the first 6 months. I think my policy caps out at 18 months, if I remember correctly. But what will happen is, because again, these will be vacant for 6 months. I've already got that money in a separate check. It's not counted in the loss. This is a separate line item with separate coverage. And they gave me a check for that. And when 6 months go by and it's not done, they'll send me another one. Awesome.
Yes, that's correct. That's correct. Yeah. So every policy calls it something different. If you're looking at that declarations page, it may be fair rental value is another term for it. But yes, it generally is going to cover the fair rental value of the property during the time in which it's unfit for use. The way it's paid out is often different. So some policies pay it out on a monthly basis versus 6 months up front. There's various regulations that guide that. For example, folks in California dealing with the wildfires right now, companies are required to issue 4 months up front for any type of additional living expenses. So the scenarios are different by policy, but for you as an investor, one thing that helps make those claims go faster is if you're organized with your documents and you've got your lease agreements for the tenants that are living there already on hand. You can send those over to the claims adjuster. If you're filling out your claim form online, some of them even allow you to upload the document right there from the beginning. So again, documentation, having that information available helps make the claims process a lot smoother.
Yeah, so I'll let you wrap it up after this. So hopefully by the end of this, we've demystified, we've hopefully reduced the stress level a little bit for anybody who's going through this the first time. But also hopefully equally so, if you are a real estate investor, you're going to go find your deck pages now. You're going to go figure out if you are underinsured, because that is not a nice surprise to find out once you've had a claim. You can't undo it at that point. What do you want, CJ? What do you want to close with?
You were breaking up a little bit there on me, so I lost you for about the last 15 seconds.
That's
so
okay.
I was just
going to say, CJ, bring us home. What do you want to tell people as you give them hope and all of that going forward?
So the one thing that I would probably say, just as a piece of advice, is a lot of the people listening to this probably spend a lot of time researching, educating themselves on the specifics of their next deal, right? But a lot of people don't do the time educating themselves on the specifics of their policy. And that's the sole source of how their investment is protected when it comes to a peril occurring. And so I would just encourage people to put forth the same time and energy into investigating that side to make sure that you're adequately protected. Not just to make the conversations easier when a claim happens. That's not the point, but it's to protect your investment, because bad things will inevitably happen, whether they're as severe as a fire loss or, somebody has a water claim. I had one crazy one. Listen to this. Sorry, I'm going a little longer on the close here, but a lot of policies have water damage limitations. They may cap the percentage payable under a water claim. I saw one the other day where a landlord had the water cut off at a property, and the tenant removed their washer and their dryer out of the laundry room. The next tenant was set to start. They cut back on the utilities. Water starts shooting out of the supply lines because the tenant didn't close the valve because the water was already off.
They didn't turn it.
Right. So the water damage is happening for days, right? And we find out later that there was a limitation on their policy that they had never looked at. And so it's important, I think, for people to do that research and talk to their agent, talk to whoever their trusted insurance professional is, to make sure that they have the adequate coverage to protect their investment, which is what it is, and make sure that when something bad happens, they have adequate coverage.
Folks, I wanted Steadily on the channel because, again, I think we've got, the mortgage guys, Convoy, Velocity, Matt. We needed insurance because, again, I've had to use it, 5 times. I got caught in 2023 being underinsured on some stuff. This is important stuff. You're building a portfolio, you're building a net worth, but if it's not protected, it could go all the way in a peril, as CJ said. So do yourself a favor, check it out. Talk to people about it. Make sure you're covered. I suggest getting quotes just to see what's what. See if it's better for you. The link is there. CJ, thank you so much.
Thank you. Have a great rest of your day.
You too.